Managing your money is an important part of everyone's life, but it can be hard to do. But there are some money rules that everyone should follow if they want to be financially successful. These rules give you a way to make smart decisions about money, deal with debt, and invest wisely. Here are 10 money rules for financial success. Number 10. Always spend less than you make. Stay within your means. This is the most important rule when it comes to making money. If you spend more than you make, you'll end up in debt, which will keep pulling you down like an anchor tied to your leg. Don't use credit cards unless you have to buy something or pay for something urgently. Use cash when you can, like when you buy groceries or clothes, and only use your credit card when you have to and can pay it off later with money from somewhere else. You should also try not to buy things that you don't need. This is another way to say, don't get into debt just because you want to do something fun or cool. There are a lot of things that lose value over time. If you can, don't buy them at all. Number 9. Keep track of everything you spend. Part of making a budget is keeping track of what you spend. Once you keep track of what you spend, you'll be able to see where all your money goes and use that information to make better financial decisions. Use an app or piece of paper to help you keep track of how much you spend. You can also use pen and paper if that's easier for you. No matter which method works best for you, it's important that it's easy enough that the user doesn't have to do too much work to track. Keep track of every single dollar you spend in one place. This will make it easy for users to find their total expenses at any time during the month. They don't have to piece together information from different sources about what they bought and when, such as receipts from stores and ATM withdrawals made at banks other than where their checking accounts are held. Number 8. Don't be late with your bills. Bills must be paid on time if you want to stay out of debt. If you don't, it could end up costing you more. This is why your credit score will go down if you don't pay on time, which could make it more expensive to borrow money in the future. Over time, the fees for being late will eat away at your money. If the company that handles your loan or payment tries to get late fees from you, they could sue you or maybe even take money from your paycheck at another job if they are successful. Number 7. Make a spending plan and stick to it. Making a budget is the first step to planning your spending, saving money, and getting ahead financially. To make a budget, you need to know how much money you make and how much you spend. You might also want to think about whether or not you will have any other ways to make money. Once you know how much money comes in and goes out each month, you can figure out what should stay the same and what should change over time. Both categories are important because they help you make decisions about your money in the future and make sure everything is running smoothly right now. Number 6. Start saving now for your old age. Starting to save for retirement as soon as possible is one of the most important things you can do. In general, your investments will grow into more money over time if you start earlier and put more money into them each month. How much you should save each month doesn't have a single right answer. It depends on your goals, your income, and your savings rate right now, among other things. But we suggest that you put away at least 10% of your income each year. If you get less than that, you won't have enough money to live comfortably when you retire. If you have a 401k at work or an IRA, put all of your contributions into low-cost index funds instead of actively managed mutual funds or stocks that might lose value over time because of fees and bad performance. Number 5. Pay down your debts right away. Paying off your debt has a lot of benefits. It can help you sleep better at night and even save you money. If you have credit card debt, for example, you will not only pay less interest each month if you pay down the principal balance faster, but if a creditor raises your interest rate because you paid late, the new higher rate won't take effect until the end of your current introductory period. This means that you should pay off your balance early before the higher rate kicks in. Number 4. Use the 1/3 rule as a guide. The 1/3 rule is a good way to make sure you don't spend too much on any one thing. You should spend no more than 1/3 of what you bring home each month. For example, if you make $5,000 a month, you shouldn't spend more than $1,500 on housing. You shouldn't spend more than $600 on food, including groceries and eating out. You don't have to go crazy with this rule. It just helps you keep track of your spending so it doesn't get out of hand. Number 3. Be smart about how much you take out of your 401k. You shouldn't borrow more money than you need, and you should pay it back as soon as you can. If the loan is for something specific, like buying a house or paying for college, set up an automatic repayment plan so that it is paid off in 2 or 3 years at most. Make sure you have the right to borrow. Most plans have a limit on how much of your own money you can take out before you have to pay extra fees and penalties. Before you take out any loans, ask the person in charge of the plan what the limits are so you don't go over them. Learn everything about the loan. The lender may charge interest on all or part of your balance, and if you don't pay as agreed, you may have to pay fees. You'll also want to make sure that this extra debt doesn't put too much strain on your budget. If it does, paying back these loans could ruin your finances and cause you to burn out from stress. Number 2. Build up an emergency fund with enough money to cover your living costs for 6 to 9 months. Whether you're saving for a wedding, retirement, graduate school, or another big purchase, it's important to have an emergency fund with enough money for 6 to 9 months of living costs. When you are young and don't have much debt, it can be hard to save a lot of money. Consider spending less money on things like eating out and putting more money into your savings account every month. If you feel like you can't get the job done, there are many tools that can help. With automatic savings plans, you can save money without having to think about it every day. Some banks offer these services for free, while others charge a monthly fee but offer higher interest rates than traditional online banks that don't charge a fee. You can also set up automatic transfers from your checking account to a high-yield savings account if you want more control over how often the money goes into savings versus places like retirement accounts or college funds. Number 1. Be sure you know who owns what in a partnership before establishing a business. A business that is owned by 2 or more people is called a partnership. Partners are equally responsible for the business's debts. This means that if the business fails, each partner loses everything they put into it. Make sure you know who owns what and how to set up a partnership before you start one. If you and your partner have some disagreements, here are some ways to deal with them. Talk things over until you both agree on something fair. If you need to, have a lawyer do the talking for you. Use a mediator to help settle disagreements. Everyone can get ahead financially if they follow these money rules. Everyone can be successful with their money if they follow these rules. It's not just about money, it's about your financial health as a whole. Don't worry about what you don't have or what you can't do. That won't help you find happiness. Instead, you should focus on what is going well and add to it with even better ideas. It is important to have a plan for your money so you can invest wisely, spend wisely, and get the most out of your money by paying down debt. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.